change, percentage change in each day, I actually look at it. Okay, when it is positive, it is up, it is up, it is up. When it is negative, I write down, down, up, down, down, except for when it was a 0, which was unchanged. So also I note whenever it is negative, I put down, down, down. So in terms of price, also the same I did to volume. So when the volume percentage change is positive, I will put in my comment as up, up. When it's negative, I put in my down, down. So let's interpret these two sides. Now in AfriPood, you will notice. Let's look at on the 3rd. You will notice that on the 2nd of February, AfriFood gained 1.93%, while on the 3rd, it gained 4.21%, which was strongly up. Now, the volume change that day was actually 12.12%. Now, the 3rd day, AfriFood gained 0.61%, lower than 4.21% it had on the 3rd of February. Now, while the percentage change shows that volume increased by 15.88%. Now, the price, notice the uptrend is weak because we had a 0.61. Our expectation would have been that it will go to probably above 4.21, but here we only had a 0.61. So the price up is weak while the volume is strong. So there's a divergence here. Price is weak, volume is strong. There's a divergence. It's an early signal that exit this stock. Now, on the 8th of February, what happened? We realized that the share price of AfriFood fell by 1.41%, while volume also fell. The change in volume was so high that it was 1.419, which is a 52.71%. The volume that day tells us that the bears were in control. That was why it was down. But the volume change shows that it was so high while the price also fell. It tells us that we are in a downtrend. What happened the next day? We also saw price fell and volume also fell. So on the 8th, it was a spike. On the 9th, it followed suit. It went down. On the 12th, we now start seeing price of AfriFood coming down. Then we also noted that day also volume was so high. The volume traded was so high, the price in terms of change. So you see, we saw a price trending down, and volume also is strong too. So it tells us that we are in a downtrend. So on, so on, so on, until we got to this day on the 16th, where we saw that price did not really change. So there was indecision in the market, but volume that was traded was so high. That is what we call a spike. It's an early signal to be out of the market. Thereafter, what did we see? We started seeing price move all the way from 5 naira, though it trended a bit up. As it was trending up, volume was reducing, was down. Then we noted that price was going up, but volume showed weakness in the uptrend. We also saw price was down strongly and volume rose strongly. So remember the principle, when price fell down strongly and we have high volume, it means that we are expecting a downtrend in subsequent day, which was what we saw in the price, also in the price, until when we now saw price reversed this day from negative 8.6 to 1.72, and we now saw volume was strong on the upside. 50 million units was traded in this day. Now volume was so strong on the upside. It tells us that we may likely see uptrend in the next day, and which was what we saw too. So the next day, Afripud gained 3.80% up, but volume traded that day was lower than 50 million, though down, very much lower, was down. Now it still tells us a weakness. So what did we saw on the second? We saw the price. The share price fell by 1.026% and volume was down. So there's a bit of a divergence. Volume down, price down, volume down. But all we needed to see is price down, volume up. But here we saw price down, volume down. So it tells us that it still goes in line with our reversal, that price will continue up and we may likely see a continued uptrend. But let me also show the charts for this so that at least, like I said, what the technical analyst part does is just to give us a good visualization of what is happening. It's not anything special. So let me just open to Afripud, and for you to understand what I'm trying to point out here. So let's look at it. Yes, we drew it in the Excel sheet, but also I want to like show it to us using our chart so that it's not really different. It's the same thing. It's just understanding the concept will help you out. Now, as we see the price of Afripud rising, like I said, the chart part is just to give us a visual, a clear visual, a clear visuals of what the relationship. We saw volume trending down until this day that we saw a spike in volume. When we saw a spike in volume, we saw high volume traded. Now, there we now saw that the subsequent day was down. Now, on this day, 28th of February, we saw price rally and we also saw high volume, spike in volume on the upside. Now, there are two things here. It's either the trend is ending and we'll see more downtrend. So subsequently, volume did not go, traded volume was not up to 15 million, but we saw volume reducing subsequently. So it's still the same thing. So what does this tells us? It tells us that price is trending, volume is weak, and there's no it means that it's not a correlation. What we needed is price trending up, volume strong. So if I were you, I would rather be out of this stock. Okay, let's go to our presentation and let me just pick the last two examples. Based on what I just explained now to you, was just in the Excel. So let's go to the next. I just want to give you an example, a chart example of it. Look at GT Bank. You will see that as price is coming down, volume was rising. Tells us we're going to see more downtrend. But when we saw price coming down, volume fell. That's a weakness. Remember the four principles: downtrend, rising volume, more downtrend. But downtrend, falling volume, weakness in the downtrend, expect a bull trend. So we now start seeing uptrend, falling volume. We saw price fell. We saw volume, price ranging within a particular level. Tells us we're still in a weakness. The price has potential for an uptrend. So we started seeing uptrend, and we saw an uptrend in GT Bank until we got to a level where when we start seeing uptrend, we started seeing reduced volume, which is lack of interest in what is traded. Now, GT Bank currently, you see this red line coming down. You see volume coming down. Just as there's a weakness, there's a resistance in people to sell. And we started seeing GT Bank a bit accumulating, and we are currently seeing volume building up gradually. So it tells us that price is trending up gradually, volume also going up gradually. So we are seeing a bit of accumulation in GTBank at the moment. Now note the same thing we have seen here is what we can do on our Excel sheet too. Same as Fidelity, I know this will be of interest to many. We see Fidelity trending up. At a point, we saw volume rising. Now, Fidelity was trending up. We start seeing volume trending down. It was trending down, and currently, Fidelity is trending down. Volume is trending down. Tells me that there's still resistance. There's a weakness in the downtrend. All we needed to see is more downtrend in price, more change in downtrend in price, and high volume. But here now you're seeing downtrend and low volume. So there's a resistance to sell from the investing community. So there will likely be a build up. So what we need to see at this point is the day we see price change or close positive and we see an increased volume, then it's a time for us to begin to look at buy in Fidelity. Now the new kid on the block, which is Japol, and why I would never buy Japol. Yes, Japol has been rising sharply and strongly. But look at something, the volume has been down. Remember I said when we see a spike in volume, it could be the end of a trend. So you saw a spike in volume in this day and it was the end of a downtrend and we started seeing uptrend. But why I would not buy Japol is that despite the uptrend in Japol, there's a downtrend in the volume. So volume is not supporting this uptrend. So in essence, for you to make a good investment decision, when you see price trending up, it must be supported by volume. Price is going up, trending up, trending up, trending up day by day. You must also see volume also rise day by day. But when you see a weakness in price, that is today it had 4 point something percent, tomorrow it gained 2%. There's a weakness from what it had in the previous day. So you need to look at what volume is doing. At the moment you are seeing a weakness in that price and you also see volume increase sharply, at that point begin to think about exit. So we'll go into our chart. I will now explain one or two concepts. I'll also take one or two questions. Then we'll go into our chart and we'll go into our chart room. I will explain some of these concepts, summarize it, and make you understand what you need to look out for day after day, day by day. The lecture continues, it doesn't stop here, so there's going to be a practical thing to it all through the next trading week, which we are going to from on the 5th. We will be monitoring the relationship between price and volume. We're going to pick 2 or 3 stocks and we're going to monitor the relationship between price and volume. We are not limited to those 2 or 3 stocks, don't worry. You can come and raise any other stock, but we want to look at the practical application of this. Thank you. Let's go to our chart board now.